So let's begin with the big issue, shall we? Will it be 25 basis points or 50?
There will be a cut.
It's probably going to happen.
They'll probably cut 25.
50.
25.
50.
50 basis points is quite unlikely.
I don't think it would be horribly shocked if they cut 50.
There is really no reason for the Fed to do that unless we're in some kind of an emergency situation.
You get more bang for the buck if you do a 50 bips cut.
That would be a sign of panic.
When you're operating with a risk management framework, doing just what's in the market price is not enough.
They have to be mindful that there is less opportunity for them to catch up if they find themselves behind the curve.
Powell had a perfect opportunity during his testimony to Congress to push back against the notion of a 50 basis point rate cut, and he did not take that opportunity.
So the key question, just what will the Fed be bringing to the table in just 2 weeks' time? Joining me around the table, Mark Connors of Credit Suisse, Michael Purves of Tallbacken Capital Advisors, and Jay Pelosky of TPW Investment Management. Jay, your thoughts on what a 24 hours we've had in the world of Fed speak? Are you confused? Any clarity whatsoever?
Well, I do think there might have been a little bit of clarity, not in whether it's 25 or 50 basis points, but in the focus on the neutral rate of interest and the sharp reduction in that Williams mentioned the other day. I think that's a big deal, because our main thesis is lower for longer global growth, which is based on this idea that neutral rate of interest and potential growth rates have decelerated materially, and that helps explain the environment. And for us, the big point is that environment is constructive for risk assets. Low growth is not no growth, and low inflation keeps the central banks on the side of the investors as opposed to fighting investors.
Michael Purves, your thoughts?
Well, I think given the gap between where the money markets are and where the Fed ostensibly is, right? So let's assume we get 25 basis points on July 31. Then what? There's still 50 basis points to come, according to the money markets, right? And so how this gap gets resolved, I think, is going to be one that, the Fed is going to have to, that's weave through that in a very subtle way, right?
Communicate effectively.
To communicate effectively. And over the last 9 months, they've had some issues with communicating in the most smooth and graceful way. Not that their job is easy, but I do think it's really important how they manage this gap.
Mark Connors.
So take a cue on whether it's 25 or 50 to look at the balances of hedge fund assets on our platform. It's still right in the middle. I mean, they are getting longer. They're covering shorts. They're covering their high beta names in anticipation of that risk asset bid that you talked about, Jay. But as far as 25 or 50, if the 10-year is 10 or 15 basis points lower, I think there's more of a chance of a 50 basis point. I think the cue is they're looking to the markets for information, not from the economy.